There are three types of business structure. One is sole proprietorship, meaning only one person is involved as the overall owner of the business. He or she is exposed to the uh, business risk. So if the company becomes successful, he or she corners the profit. However, if it fails, becomes bankrupt, the losses and liability could extend towards its the person or the sole proprietor's personal assets. Now, a partnership, as the name suggests, it is composed of more than one person. It is composed of two or more individuals agreeing to pull in and put together capital, either financial capital or intellectual capital or labor industry, and agree to enter into a partnership. And the partnership takes a different juridical identity from its owners. So depending on the partnership form, it could be general partnership, wherein any obligations that are higher than the company's resources, the funds, the unpaid portion could extend towards the partner's respective personal assets. Limited partnership, on the other hand, certain partners have a limited exposure to the partnership's liabilities. So there are different types of partnerships. Apart from that, meron pa yung general partnerships and general professional partnerships. These are the common forms of entities practicing their profession, such as accounting and law firms and architecture and engineering companies. Most of them take the partnership form. And the other types of business structure would be corporations, wherein entirely new an entity is created out of operation of law through the corporation code, recognized by the SEC as a separate juridical entity from its shareholders. So the shareholders' liability is only to the extent of its investment in the said company, and the entity created is created out of operation of law, separate and distinct from the shareholders. Now, in all these three business structures, sole proprietorship, partnership, corporation, in analyzing valuation, technically they're the same. So there's not much difference. What would be the key difference would be on the equity structure. Later on, when we focus on the accounting balance sheet, we'll see that in the this business structures would only be obvious when you look at the equity portion. Asset side, liability side, we're pretty much identical, although scale-wise it could be different, but still, in theory, the difference would lie in their equity structure.